Good afternoon, ladies and gentlemen. Thank you very much for that introduction. When I got this request from VCCircle to talk about entrepreneurial opportunities in financial services, opportunities and challenges, I actually stepped back for a moment. If you could kindly settle down in the back, please, I'll be really grateful to you. I actually stepped back and started thinking about why is it that when we talk entrepreneurs, all new entrepreneurs are coming up only in the new age economies like financial services, payment systems. I really request your friends to just close the door, settle down. I'm finding it difficult to concentrate, friends. I really request you. If anybody from the organizers are there, if you could just get this thing to settle down, please. Thank you. So, as to why is it that all new entrepreneurial activities we are seeing is in this space of, let me say, payment services, e-com, taxi services, NBFCs, wealth management, internet, and so on and so forth. Primarily, when all of us grew up through the 80s, 90s, I think when we thought of entrepreneurs, we only thought of maybe the Tata, the Birla, the Siemens, the Schlumberger, and frankly, for anybody of any employee, so to say, for any employees, for example, to quit these organizations and start up an entrepreneurial venture, or anybody who probably leaves and takes up his first job after college and thinking of setting up any of these industries was practically impossible. You needed generations of having built up these businesses and maybe investments of maybe $2, $3, $4 billion. It's just not possible. And therefore, our whole concept of entrepreneurship over a period of time has changed and evolved to say that even small startup firms is entrepreneurship, and that's one big change that has happened over a period of time. If not manufacturing, then what gives us this sort of opportunity? Services. Now, because there are only anyway three components. We talk of agriculture, we talk of manufacturing, we talk of services. Now, agriculture will keep it on the side because I'm not very sure anybody here is particularly interested on entrepreneurship on that space. Maybe some of you are, but out of context for today's discussion. So when you talk services, again, I stepped back and saw who are the companies in the services space who are very significant or important or have created something significant over the last 15 years, because services industry is largely 15, 20 years phenomenon in India. Again, you see mutual funds. Now, when you look at mutual funds, the names that you see are, again, Birla Financial Services and ICICI mutual fund, and HDFC mutual fund, and IDFC mutual fund, Reliance mutual fund. You go through, the list is all again list of institutions, not individuals who created any of these institutions, and therefore, again, it's an institutional play. You think back and see who are the insurance companies that have created anything. Again, you'll find ICICI, HDFC, IDFC, and the list goes on. Now you say, okay, if this is insurance, this is life insurance, the story in general insurance is not any different, then you actually step back and see, okay, what's happening to banks? Now, of the, maybe 16 old private sector banks and 15 new private sector banks, what we call new, except, Kotak and Kotak Mahindra Bank and Yes Bank, literally everybody else also has been either an institution, ICICI Bank and HDFC Bank and so on and so forth, or even the old private sector banks haven't been created anything in our generation. So the point I'm trying to drive is that traditionally, even in the services sector, entrepreneurship has largely come from institutional players, not from individuals. And the subject of today's discussion is to see how individuals can create entrepreneurship, not institutions. That story is done and dusted, it's been going on and on. Now, at that stage, then I stepped back and I went to some of the sites and saw what is the connection between how long is the vintage of an institution that has existed and how successful has these companies been, and does that give, so to say, employees like ours who are maybe erstwhile employees or today's employees or maybe many people in the audience here, what window of opportunity does it give us if we can't penetrate the manufacturing sector, if we can't penetrate the institutions, what is the space available for us? Now, when I analyzed the data, I found a lot of glimmer of hope, which I'm sure will gladden many of your hearts as well. City Union Bank, founded in 1905, okay? Dhanalakshmi Bank, founded in 1927, market cap 500 crores. J&K Bank, founded in 1938, market cap 4,800 crores. Karnataka Bank, founded in 1924, market cap 2,300 crores. Karur Vysya Bank, founded in 1916, market cap 5,700 crores after 100 years of existence. Okay? Lakshmi Vilas Bank, founded in 1926, 90 years before today, market cap 1,300 crores. You have South Indian Bank, founded in 1929, market cap 2,700 crores. Now, when I looked at these numbers, then I said, okay, this is a story. Let's go and see our public sector banks. It's not very different. Again, a Dena Bank founded some maybe 90 or 100 years ago, market cap 2,400 crores. UCO Bank, 4,700 crores. Punjab and Sindh Bank maybe founded through the British Raj, 1,600 crore market cap. Corporation Bank, 4,000 crores. Vijaya Bank, 3,100 crores. Then when you look back, then I say, it's not how long somebody has been in existence, it is how relevant they were with the times. That's all that mattered. The story is not to run down any of these institutions. They are great institutions, probably provided great services to the nation over a period of time. So none of you please get me wrong. But the point still is that the new institutions, now I take, Shriram Transport, which have found a way themselves in a differentiated space. In truck financing, market cap of 19,000 crores. You have a Mahindra Finance, maybe founded 15 years ago by Ramesh Iyer as the founding CEO, and of course the Mahindra Group, market cap of 15,000 crores, right? So the point is that any of these institutions that have come up in the last 15, 20 years, if they are more relevant to the times, there is a space for us. If we're not relevant to the times, no space for us, no matter how much is the vintage. And when I look at this data, it gives me great confidence that, okay, we may have started just 4 years ago, 3 years ago, it doesn't matter. By the time we'll wake up in 2020, 2025, 2040, man, we really, if we are in tune with the times, we really have a big opportunity. And that's my big takeaway by looking at these numbers. Now, when we say, what are the opportunities that are coming up? If you recollect the names I talked about, the e-com industry, the Flipkarts of the world, then you have the payment services, the Oxygen, the PayWorld, the Paytm, the taxi services, the Uber, the Olas, the NBFCs we talked about, the wealth management firms that have come up. Even India Infoline, for example, may have started wealth management business maybe 5 or 6, maybe 10 years ago. It's already such a large business. Maybe now, if you see all these businesses, what is a common pattern between all of these services-based, new age economy-based entrepreneurship companies, is that one, entry stakes are relatively low. I don't add those mutual funds and banks in that list because their entry stakes are relatively high. But to set up an Utkarsh, to set up a Varthana, to set up a Bandhan, I don't think the equity capital requirement is very, very big. All it requires is a lot of enterprise. But yes, they could make a space there. Secondly, license requirements were relatively low. Number 2 condition, I look for these things when we feel that for industry is a very, very, very great opportunity for entrepreneurship. License requirements are relatively low. Of course, to start an NBFC or to start many other wealth management business, license conditions are not really that much tougher, right? You broadly enter as long as you don't have a terrible track record. People generally let you have a say. If you don't get a specific license from RBI, which may take maybe 5 months or 6 months or a year, you can go and acquire a stake in a small NBFC, just get started. So license. Third is, when we talk of the untapped opportunity in India, we talk of India growing at 8%, 9%, 10% for next 15, 20 years. All this is fantastic, but it is truly untapped opportunity. Every shopkeeper we see on the road is unfunded, and it's a real opportunity staring at us day in and day out when we drive around the cars in the city. Fourth is, a differentiated model. We heard from this brilliant panel discussion and to each of the people who spoke before about how they're all making very unique opportunities and space and so on and so forth. Something of a differentiated model. And finally, apart from these 4 conditions, having great enterprise. Because none of the people who have spoken here, or myself, or anybody, has had it easy at the early stage when you just start it off. That really can be the issue. And I think the defining difference between people who pull off at the early stage and make it big or make it, let me say, medium size. I'm not so much of a believer of big and small and so on and so forth. At least in the financial services, there is space for the big fish, the small fish, and a lot of fish out here. But it's more about anybody who made it of any relevance, significance, profitable, vibrant, energetic, growing. I think the differentiation is how much of enterprise those leaders at the top have at the time when they are going through stresses. I can tell you, for example, the organizers asked me to speak about capital first, and I will talk about very briefly about it, just to bring it in context of the discussion. There are only two ways of making some of these businesses happen, right? One is to find a unique space, like we talked about Mahindras and the Srirams, and now Capital First. We are finding our feet into the consumer financing and the SME financing business in a significant way, or find ourselves a unique way, or it's not or, probably and, find ourselves a unique way of doing than what other people do. We heard the P2P lending. I heard of one model where, I just read recently that Facebook is actually launching their own credit score. And how is Facebook launching its own credit score? Facebook is actually going to see who our friends are and seeing how the friends' credit scores are, and probably doing some algo out of it and figuring out what credit we are worth it. And theoretically, a lender can, instead of calling Sibyl or calling Equifax, can be actually dialing up Facebook, take a Facebook score, and taking a decision on the customer. Now, expand this story. This is just a patent. I hope Facebook doesn't do that. I pretty much despise this idea that, depending on who my friends are, you're passing a judgment on me. It could just be my classmate, or it could be anybody. But I didn't very much like it. But they filed a patent for it. I actually went to the website and checked out the patent, and it is actually there. Now, of course, we know of the concept of social scores, which are going on. Somebody told me this morning about a model where, depending whom we're calling, and someone is crawling the people whom we're calling, and depending on the people we call, what the scores are. I'm not very sure it's again a good idea. Sometimes I call my driver, I call somebody and I talk to them. I'm not very sure you want to mix up their scorecards with my scores. But well, some people are talking of very unique models. Someone else told me a very unique model of financing, which is figuring out who the guarantors are. And this was very interesting. I heard saying that, okay, you can lend, if I want to borrow 100,000 rupees, I could probably call a few of my friends saying that, look, friend, can you just guarantee on my behalf? Maybe I can friend 10 friends, and each one of them guarantee 10,000 rupees, and the lender lends to me. This way, the friends really haven't put cash on the table, but at least they've guaranteed, and the lender gets some comfort out of that. Then, of course, one lady from Harvard met me the other day, and she told me we do a psychometric-based lending, whereby I'm going to ask the entrepreneurs some 20 questions, and the questions were, some questions on maths, some question of integrity, some question were supposed to completely psych you. Question like, what percentage of promoters in India, according to you, are siphoning off money from the company? And apparently, if you say it's 90%, then chances are they're devising the logic at the back of the mind, saying that if you believe everybody is siphoning out, good chance that you're siphoning it out, right? Right? And they're finding it out, and they're doing some psychometric model and figuring it out. Now, and the models we heard this afternoon. Now, clearly, people are figuring out something different to do, something faster to do, something more connected with the times. And from when we look at ourselves, I can tell you that I'm always looking for these opportunities, something that is different, something that can that can break the norm. So, either a unique space or a different way of doing. If we find these, then, all the stories of market caps I told you, new institutions have created, of course, extraordinary value, and age stands largely irrelevant. Now, this quick comment on Capital First, for example. In 2010, we had a 935 crore book, and we had an NPA of 5.3% gross. We had a net NPA of about a 3.5% net, and we had a capital of close to about 690 crores. So I did a deal with the shareholders, or the majority shareholders at that point of time, saying that you give me 10% of this company. Now, obviously, we're not able to borrow. Frankly, any of you who's been NBFCCR, and many of you met me over lunch, try telling a lender that your NPA is 5%. I guarantee I want to figure out the lender who wants to lend to you. It's impossible. It's very, 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 very tough. If anything, if you're a small NBFC with a 500 crore, 600 crore, 1,000 crore loan book, you have to start the conversation by saying, oh yeah, 1,000 crores, I have a very differentiated model, my NPA is 0%, I'm backed by this equity. If you're all things positive, someone will be kind enough to lend you some money at 14% or 13%, right? So things can be that tough. So at that stage, I found this company under some circumstances by flying with somebody and all that. And then I said, okay, give me 10%. Then for the next 2 years, we kept looking for who will back this transaction, because of course everybody knows that you need equity to grow financial services. But somehow I believed that if I left ICICI, I will find someone at that point of time to back the transaction. It took us a long walk of 2 years, and finally we got a very, very strong, very reputed, and really very professional sort of a shareholder in the form of Warburg Pincus, who backed the transaction, and then the company grew from there. So I mean that transaction came somewhere by the time the loan book had touched close to about 6,000 crores, and during this period is when, frankly, this 2-year period can be really, really the struggle period for any institution. It's not us. I'm not the first guy who's going through this. I'm sure every one of you, everybody who's been anything has done something significant. Its story is not about what we did. The story is really that this stage can be tough, but it can be done. But frankly, from there, now from a 6,000 crore book, we've become close to a 12,000 crore book. Every year, last 3 years, we've raised equity. Equity raising becomes extremely easy. In 2010, through a pref, we got close to 100 crores from Warburg Pincus. Then 2013-14, the next financial year, we raised about 200 crores. Then again, 14-15, we raised 300 crores of equity. Now equity has touched about 2,200 crores of net worth of the company and so on. So things all look good from there on. But the point is that once we get this initial start, then life looks all good from there, and life moves on. So the rest is a matter of finer detail, but without taking into very much detail. Now the point, therefore, is that if you take the 2-minute snapshot of Capital First as example in this context. Sorry, the slide is here. In 2010 12 is when we did the transaction. We got new shareholders, we got a new board, we got a new company called Capital First, the basic company name, and then the story changed, and then I told you about the equity, and then the net worth I talked to you about. So, and of course, I talked to you about the rest of it. So the story, therefore, is that once we get our bearings together, it is not easy, but it is not impossible either. And if any of us have to make anything out of this opportunity, then I think the big story comes through in terms of being able to get one's big backing. It makes a big difference. The other thing which I often find is material to this discussion is that we should not think ever that we are entrepreneurs, some great people or anything like that. I think the real success in making our people, our 1 downs, our 2 downs, at least the senior people, everybody feel it's their company, because nobody works for somebody else's company. They might as well go and work for some institution. Right? People want to work for their own. And I think at that point of time, the kind of freedom we give people in taking decisions, because every morning if we see something new, okay, why don't we change it? Okay, we saw somebody else's, we saw some other investor presentation, we feel like changing it, why don't we go and change it? That sort of freedom of decision making, either for us or for 1 downs or for 2 downs, I think it's really critical for making the institution work and feel like an entrepreneurial organization. Otherwise, anybody in this room, I can guarantee you, we start thinking about it like our company, my company, I founded it. I can tell you where, everybody of our team members will also be looking at the same time saying that, how do I found the next company? I don't want to work for you. Last thing in my mind, to close this discussion off as to what is always on my mind, is this concept of, founder's vision. It's rubbish, according to me. It's total rubbish, because it is a statement made by founders for their own ego and for what they believe they should, the name legacy should live on. Because founders of the nation thought that constitution should be like this. Founders of the nation thought there should be a socialist republic. Oh, the hell! I mean, it's been 50 years, 70 years. Who is a founder of a nation? The nation has moved on, right? Some point of time, Mao thought that he is a founder of China, and he believed now the founder's vision has changed in China. They're doing something else, right? So when nations can change, I think this founder's vision is a rubbish statement. The vision has to constantly keep changing with the times, and any vision crafted in the last 5, 6, 10 years is the vision, and anything beyond that is totally irrelevant. And I think anybody who are making this concept like founder's vision, who makes and does all the company, I don't think what we made right now, we believe we should be in the space of SME, retail, and we should not be wholesale, we should change the company, we should do this. Of course, it's all true, but it's true only up to a point. Who knows, we'll do something else tomorrow. May not fundamentally change the model, my eyes can't see today, but it should be open to change, and that's the whole point. So with these few words, I just close my discussion just to say that this whole concept of entrepreneurship, both for employees, who want to become entrepreneurs, or for senior employees who want to feel like entrepreneurs, who are really, really entrepreneurs. It's not easy, but it's not impossible either. Thank you, ladies and gentlemen. Any comments, folks, before I sign off? Yeah.
So great to hear your story. I've seen you during ICICI Bank days also and this time also. I just wanted to check within the 2 years that you struggled, how many times you felt that, it should have been better continuing my high-paying job? This is a personal question if you'd like to answer.
Yeah, certainly. I felt terrible somewhere around 2011, where banks were not funding it. And one bank I felt very, very insulted actually, because I applied for a bank, and I'll not name that bank, but I applied for a 300 crore line of credit with that bank. And I hoped to get an interest rate of something like about 12% or so at that point of time, because we were borrowing those days at 14%, so we thought that maybe 12 also looks great. And it's a big bank. And I got an offer letter from that bank for 50 crores. And first I felt insulted, man, for this net worth you could have given me better. And worst of all, I got the limit at about 13%, 13.5%. And finally, the final text was that provided you can pledge priority sector funding for me. So it does feel terrible at that point. Secondly, if you have no visibility of who's going to back this transaction, I have one thing I've learned, that if you don't have a strong equity player, life does become difficult. And I was looking, it does feel sometimes worthless. But it did occur to me at least once or twice. But frankly, I have only learned that if we look at the past, this is what I should have done, then anybody who looks in the back is finished. Is truly, truly, truly finished. And if we make some losses, we should make the loss, cut losses, we should forget about it. If we suddenly lost some money last month in a particular deal, we should just forget about it next day and we should move on with it. Because if we cry about the past, then we can't do the future. So we have to keep thinking possible, 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 possible. It comes out. Yes, sir. See, frankly, in lending also, for the people who spoke here, and I say this for ourselves also, see, lending we have to be very, very careful, first of all, because we should know that there's a counterparty party who has lent to us as well, and you're not really dealing with the personal money that, oh man, I lost it, life moves. It doesn't work like that, right? Things have to match with each other, so we have to be very responsible about it. But in the process of lending, some experiments are always done. Okay, some experiment works, it doesn't work, and you have to take some loss and move with it.
Thank you. I think.
Thank you very much, ladies and gentlemen.